Hey everybody, this market is like a train. It just keeps chugging on and on and on. Hey everybody, good to be here. Let's get going here. This, of course, is the key, so take very close attention to it. But you know what? Maybe we'll pass on that. Let's get right down to it. Well, the S&P 500 made new all-time highs on Tuesday, and Friday then surpassed those. So we have to continue to ignore the naysayers. Crashes do not occur in bull markets. They never have, they never will. So no crash this year at all. Now, here we see this is just a chugging bull market. It's not an explosive bull market. But nonetheless, chugging bull markets, if you have the right stocks, can make you a lot of money. Let's take a look over here at the Dow. Now, the Dow has been kind of weak, but then with trade concerns fading a little bit, it's popped up. Now, it's still not the strongest. And take a look in the upper right-hand corner. You can see that the red line showing selling pressure is under the green line. So we had been in a period where there was more selling pressure than buying pressure, but it looks like that period is now over. Now, here's the NASDAQ. NASDAQ finally became the strongest of the three again. Tech stocks came back. And notice that we made a new all-time high here on the NASDAQ as well. Now, look at the purple predictor. The purple predictor had been running under the price action, but over the last 3 weeks has skyrocketed to now be up at the top. So whereas the smart money had been selling, now they're buying the NASDAQ. Seasonality, new all-time highs. This is our indicator. Now, I've raised the red line. So if it breaks below 164 now, I'll switch to neutral. But until then, we're bullish. Now, what does that mean? Well, it just tells us a general environment for the market is bullish. We should anticipate prices to remain strong. But here's the important thing. In our trading, I take more risk. My positions are now going to be between 50 and 100% larger than normal. And as you can see, they've been that way for months. And this is one of the ways that we significantly outperform the market. Seasonality here shows really nothing until October, but I think I prefer the Ned Davis one. The Ned Davis one, we're here in August. It actually says we should be selling off into October. Now, so far, that's not the case. Now, if you look closely, we should be making a high here, which is what we're doing, in August, and then next week we should start to see the market trend down from a seasonal perspective. Now, you can't use the scale, just the direction. But then, starting in October, big fourth quarter rally. Is there a message here? I think so. Now, this is becoming increasingly concerning to me. Now, the yield curve is a one-year leading indicator. And right now, we're back in August of last year, and the yield curve in August of last year was, okay. It was fine. It was nothing. In fact, it was pretty much irrelevant. And it's going to remain irrelevant, but notice where we are now in the lower right-hand corner. We're down to 0.75, and if we get down around 0.25, that's going to be pretty bad. Now, let's assume, for argument's sake, that it got to 0.25 tomorrow. Well, that would mean that we would be in a bear market a year from now. So right now, 2018 is looking good. Early 2019 is looking good. But late 2019, based on our really early warning system, is not looking good at all. So we may start a bear market or at least a significant correction late next year. Now, the signals aren't all there yet, but what I'm saying is the yield curve is starting to get there. All right, asset allocation, really nothing there, dribbling sideways for the last 2 weeks. Stock market risk indicator bounced up a little bit, but still remains kind of they're still trying to stay safe. They want to be in stocks, but they just don't want to be in risky stocks. Global shares rebounded a lot, but still, why bother? We have such a much better situation in the U.S. market, where we actually have a real bull market. Bonds, as I told you, are going to move higher. Now, the place where we have to worry about is right about now. So Friday's price action was fantastic. The real question is, will it surmount the highs that we made a month or so ago up above 122.5? If we do that, we could move 3-4 points higher. That's a lot in the bond market. Now, the purple predictor had been something that had been concerning me, but if you look closely, you'll see that the purple predictor is starting to catch up. In other words, the purple predictor is accelerating up more than the price action in the last week. So it looks like it's going to catch up to the price. Bond key factors. Now, they had been saying lower interest rates. They still say it, but on Friday, everything hooked up. Now, it's just one day. Doesn't mean anything. The trend of all our three critical factors remain down, which means interest rates remain down. The dollar getting down towards the bottom of the range there, and you can see we rallied up. I just don't have a strong opinion here. Just don't really. I'd rather be long the dollar than short the dollar, but not strong enough to actually do something about it. Gold, this is, except for Friday, still a bear market. Now, Friday's price action was quite good, but it doesn't mean we're out of the bear market. It just simply means maybe we'll get up to about 1235 or 1240. That's all it really means. Our key factors, the top two, which had been bearish, have actually started to turn a bit bullish, but the bottom indicator, the green line, which had been bullish, has now turned bearish. Okay, net though, I'm starting to see a bottom in the price of gold. All right, and oil really in this trading range. I can't get excited one way or the other. Bitcoin, a bit more bullish this week. Still don't want to do a trade here. I thought a couple of weeks ago we'd break down below the 5,800 level. We did not. And as you can see, the purple predictor this week has rebounded quite a bit, which suggests that we're going to go up towards the high end of the range. In other words, get up to about 8,500. So, I mean, it doesn't look like much on the chart, but that is $3,000. However, I still don't want to do a trade because there's no clear trend. We're trading at the same prices we did months ago. So the market's in a trading range. That's it. Boring. Not interested. So goodbye. However, coming up, we've got more events. Please contact our office. These are all coming up. I'm very excited about all of them. Stock Butler is where we get our trade ideas. So I would highly recommend signing up for that because if you sign up for Stock Butler, you'll see mainly where I'm getting all the great ideas from. So it's a fantastic service. All right, that's it, freebies. Talk to you later. Fully paid up members, hang on for just a second.